Alrighty, folks, it appears that my call from 2 weeks ago that we have passed peak uncertainty is proving to be correct. Obviously, last week we had the first posting of a win, an agreement between the UK and the United States. Then over the weekend, we got insight into a potential agreement between China and the US. And on top of that, we have what could have been the start of World War III between India and Pakistan. Seems to be a calm down. We have some executive orders around prescription drugs. So let's get into it. Let's talk about what passing peak uncertainty means. We are already starting to see the market really understand that peak uncertainty might be behind us. Let's start with the biggest elephant in the room, the initial outline of an agreement between the US and China. It appears that both countries have dropped the reciprocal tariff portions. What does that mean in raw numbers? It means the United States has dropped the 145% tariff down to 30%. That 30% is made up of what now appears to be a baseline, more on that in a minute, of 10%. And then China is still carrying the 20% fentanyl, bogey or number as well. China has also lowered tariffs from what was a high of 125 down to a baseline of 10%. More importantly, besides just giving this 90-day pause, which is all we have at the moment, a 90-day pause for the parties to continue communicating, we have heard from President Trump that China has agreed to open itself up to American businesses. Also, China has agreed to suspend trade barriers. According to Scott Bessent, we had an unfortunate escalation in tariffs with China, and that the next meeting with China will likely occur in the next couple of weeks. So what do we have? We have a 90-day pause. We now have a lot of folks basically happy. And it's really odd, right? Because again, if you think about being a small business who, up until a couple of weeks ago was, weeks or months away from going out of business, going bankrupt, I wonder if they're rejoicing this morning. And I got to tell you, I think they are. And it's really odd, right? If you would have gone to these small businesses and told them up front, hey, we're going to put a 30% tariff on China, they would have probably lost their mind because they would have had to raise prices, eat margin, or both. Now, these same small businesses, frankly, are probably ecstatic. They're probably giddy. They're probably on cloud nine. Why? Because at 145%, which is where we were, it was essentially an embargo. You couldn't do business. They were going to bleed inventory, have layoffs, and go out of business. Now, at 30%, most of them, not all, but most of them, should be able to figure out how to make it work. Raise prices a little, get a little more efficient. It won't be fun, it won't be easy, but it's not an embargo. It's not bankruptcy. So it's really wild when you look at this negotiation style, you put out some artificially high number, you come to some low number that in the beginning everybody would have railed against, and now they are happy. If you've ever read Art of the Deal, this is very much New York, hard-nosed real estate negotiations, and it looks like it played out. On top of that, again, we must acknowledge the fact that the U.S. and President Trump was likely instrumental in the peace agreement between India and Pakistan, two nuclear powers. Let's not forget that was a quagmire that could have gotten ugly fast. And there's hope for prescription drugs, right? I don't know if you've heard of this term, most favored nation. Essentially, the executive order that was signed this morning basically says, hey, drug companies, the cheapest price you sell to anyone else you must sell to us as well. I think that will be interesting. I don't know if you know this, but prescription drugs in the US are somewhere between 2 and 3x other nations. President Trump has highlighted in a Truth Social post that he expects prescription drugs to possibly fall 59%. I hope so. I mean, a lot of folks out there are hurt because prescription drugs are so expensive. Now let's talk about the other side, because now we're past peak uncertainty, and I think the market understands it. Last I checked, the market was up 1,000 points. The 10-year note was up 8 or 9 basis points, so it's ripping higher. Oil was up $2 or $3. It's ripping higher. What's going on? Well, we are seeing the odds of a recession leave the market. That is what is happening with oil going up and interest rates going up. You are also seeing odds of a rate cut go down. Right? We've talked about a long time, be careful what you wish for. The only way you are going to get rate cuts is if an unemployment spikes, more on that in a minute, and we get a deep, dark recession. So the odds of a rate cut in June have fallen to 11% from 23% just in a day. I'm actually shocked they're that high. The Fed has told us repeatedly recently that there are no cuts coming in June. There's not enough data between here and there. So I'm shocked it's 11%. I expect it to go lower. And again, oil jumped. Oil moved up $2 or $3 this morning. Again, all because the odds of a recession are falling. Now, let's talk about the elephant in the room for a real estate channel. As you all know, I've been saying for quite some time now that demand has evaporated, right? This peak uncertainty has caused consumers to simply refuse to participate. I wonder if we have done so much psychological damage to consumers that they are going to basically say, once bitten, twice shy. If I had to guess this morning, that's exactly where I am at. I do not expect a dramatic move in real estate, at least in the short term. We have to see more wins. But again, the fact that peak uncertainty was 10 to 12 days ago, and each and every day gets less uncertain, it will eventually get to the point where consumers feel good again. Now, of course, not all consumers. We still have whatever it is, the top 20%, having 80% of the discretionary spending. But in an economy that is driven by consumers and driven by this discretionary spending, we can't have that top 20% sitting on their wallets and doing nothing. So these are the things that we should be watching going forward. Again, I think it is important to realize and watch if peak uncertainty is behind us. It's kind of like going through a tunnel and you start to see a light at the end. It just gets bigger and bigger and bigger. Even though you're still in the tunnel and it's still dark, you can see that we will get out of it. And I've often said, if we get through this 6 months of uncertainty, things will get better in the second half, and 26 will be better than 25. It is proven to be, at least in the moment, fairly accurate thoughts. I do got to warn you about what might be some shock and awe tomorrow morning. I actually had this conversation with Dan Bird yesterday. Folks, we get CPI. We get an inflation reading tomorrow. Headline inflation last month was 2.4. It is expected to fall to 2.3. Dan Bird actually thinks that CPI could fall to 2.1. I cannot imagine how loud President Trump will be about Mr. Late Jerome Powell and the Fed. Can you imagine? Can you imagine an inflation reading tomorrow at 2.1 within a whisker shot of the Fed's target of 2, and the Fed still being in a position not to cut? Well, again, if you follow this channel and if you pay attention to what's coming in the future, we actually have the next 3 months. So what will be the June, July, and August reports that are very likely to show inflation going up again. it is not unreasonable to think that we could get 2.1 or 2.2 tomorrow, and then in 3 months be back at 2.6. There's some nuance in math in what is called the base effect. We had essentially 3 months that were flat with one negative last year. Those will fall off. And even if you just get 0.2, inflation will look to be rebounding. The Fed knows this. But again, I got to be clear. I hope tomorrow we get 2.3. If we do get 2.1, like Dan Bird highlights, I could not imagine the amount of calls for cutting and all of that where that will transpire. But good news is we'll know in less than 24 hours, actually 22 hours from now, we'll have the CPI reading and we'll see what happens. What else did we learn after the UK agreement and the outline for China? It is very clear that the 10% baseline tariff will stick, and it'll stick around for the foreseeable future. In fact, Lutnick said as much. So it appears that that clearly is the floor. No country will go below the 10% tariff. Let's talk about Meredith Whitney. Meredith Whitney is in the news again for a couple of reasons. Number one, she is blaming baby boomers. Yes, folks, the broken housing market, according to Meredith Whitney, is 100% because of the baby boomers. Apparently, according to Meredith Whitney, the baby boomers, frankly, aren't dying fast enough, aren't going to assisted living fast enough, and it is because the boomers are dragging on the housing market, her words, not mine, is why we don't have additional homes for sale. I think that is extremely misguided and really poor taste, in my opinion. But hey, you got to make headlines somehow. One of the interesting points Meredith Whitney did highlight, and again, she highlighted, I'm going to assume the data is correct for this conversation, 44%, let's just call that 50% between friends, of home equity lines today are baby boomers. Baby boomers are using their houses as ATMs. They are likely using the equity to fund their lifestyle. That's not good, in my opinion. Something else Meredith Whitney said was coming. 6% unemployment. 6. That many. 6. And she said it's coming by the fall. So let's call the fall October. To go from 4.2, let's call it at the end, at beginning of May, to 6% in October, not good. Bad. That if we go to 6% unemployment by October, we're in a recession and the Fed is cutting. I can't imagine unemployment going up that quickly, given what we see in the economy today. Again, not only we're seeing oil up, the 10-year note, I think I highlighted again, but again, it's because of the odds of a recession are wavering. Next up, last thing we got from McDonald's CEO, the rich keep dining out, but average income consumers are feeling economic anxiety. Folks, the bifurcated, the K-shaped economy, all of these things that we have talked about for the last 3 or 4 years is still going on. I do want to highlight our sponsor for the daily financial news, Steadily Landlord Insurance. I this morning sent them another property to get a quote on, and likely insurance, one of my fourplexes. Again, folks, if you are a landlord out there and you get a cancellation or refuse to renew, or you just want to get better pricing, better rates, or I should say, see if you can get better pricing and better rates, go ahead and click a link in the description. Steadily is a landlord provider only. Again, they don't service everyone, but they what they do well. And I sent them personally another fourplex to get insurance on this morning. So again, folks, have a great day. If you don't know, we also post our videos on Spotify. If you want to show me some love on Spotify and subscribe, that would be great as well. Folks, we will talk to you tomorrow live at 7:30 a.m. I hope you have an amazing day, and shout out to all 221 of you that are watching this live stream. You're amazing. I appreciate you. Thank you. Thank you. Thank you. Later.